Income taxation. Things to remember, Chapter 4. Tax rules for married couple, husband and wife. For married individuals, the husband and wife, subject to the provision of Section 51 of the NIRC, shall compute separately their individual income based on their respective total taxable income, provided that if any income expense cannot be definitely attributed or identified as exclusively earned incurred by either of the spouses, the same shall be divided equally between his spouse for the purpose of determining their respective taxable income. Married individuals, whether resident citizens, resident aliens, non-resident citizens, or non-resident aliens engaged in business in the Philippines, shall file one income tax return for the taxable year to include the income of both spouses. Where it is impracticable for the spouses to file one income tax return, each spouse may file a separate return of income, but the tax return so filed shall be consolidated by Bureau of Internal Revenue for purposes of verification of the tax for the taxable year. In one income tax return, the taxable net income and income due of each spouse shall be separately computed. Identify the income and expenses directly or wholly attributable to either of the spouses. In case of unspecified unallocated income and expenses, unless otherwise stated, these are equally distributable to each spouse. Tax rules for parents and children. For parents and children who are both working or earning income, the husband and wife, subject to the provision of Section 51D of the NIRC, shall compute separately their individual income tax based on their respective total taxable income. Minor children who are gainfully employed are mandated by law to file their own separate income tax returns through their guardians or parents. However, the income of an unmarried minor, derived from property gratuitously received from a living parent by way of gift or donation, shall be included and declared as part of parent-donor gross income in the income tax return of the parent if the related donor tax has not yet been paid. However, in the following situations, the income on such donated property shall be reported as part of the gross income in the income tax return of the child or donee, when the related donor's tax has been paid on such property, or when a transfer of such property is exempt from donor's tax. Tax rules for non-resident alien not engaged in business in the Philippines. The basic tax for non-resident alien not engaged in business in the Philippines. Non-resident alien not engaged in the business in the Philippines in general shall be taxed at a single rate of 25% based only on their gross income earned from sources within the Philippines, such as interest, cash, and or property dividends, rent, salaries, wages, premiums, annuities, compensation, remuneration, emoluments, or other profits and capital gains. So, as illustrated, the salary in the Philippines plus allowances in the Philippines plus other compensation plus dividends income plus other profit and gains plus is equal to gross income in the Philippines multiplied by 25%. Final income tax of non-resident alien not engaged in business in the Philippines. However, there is certain income within the Philippines earned by the non-resident alien not engaged in business in the Philippines taxpayer, such as capital gains from sale of properties classified as capital assets and income from passive investment that are subject to different final income tax rates. Such income items which were already subjected to the different final income tax rate are therefore to be excluded from above computation. These items of income shall be presented and discussed later in Chapter 6. Alright. Non-resident alien not engaged in business in the Philippines means a foreigner who is a resident of a foreign country and who is not authorized to engage in business in the Philippines. Tax rules for special alien Filipino employee or SAFE. Basic income tax for SAFE. Special alien for Filipino employee in general shall be taxed at a single rate of 15% based only on their gross compensation income earned from employment derived from sources within the Philippines, such as salaries, wages, commissions, allowances, honoraria, remuneration, and other emoluments. Illustration: the salaries in the Philippines plus allowance in the Philippines plus other compensation plus gross income in the Philippines multiplied by 15%. Final income tax for SAFE. However, there are certain income statements within income items. This is just the same with the non-resident alien not engaged in a business in the Philippines. Special alien or Filipino employees. refers to a foreigner or a Filipino who is holding a managerial or technical position employed by certain specified business organization in the Philippines, described as follows: regional area headquarters of multinational companies, regional operating headquarters of multinational companies, offshore banking units, foreign petroleum service contractors or subcontractors engaged in petroleum operation in the Philippines. Tax rules for minimum wage earners. The term minimum wage earner shall refer to a worker in the private sector paid the statutory minimum wage, or to an employee in public sector with compensation income of not more than the statutory minimum wage in the non-agricultural sector where he or she is assigned. The term statutory minimum wage shall refer to the rate fixed by regional tripartite wage and productivity board as defined by the Bureau of Labor and Employment Statistics of the Department of Labor and Employment. Compensation income of MWE who work in the private sector and being paid in a statutory minimum wage as fixed by regional tripartite wage and productivity board, national wages and productivity commission applicable to the place where he or she is assigned, shall be exempt from income taxation. Compensation income of employees in the public sector with compensation income or not more than SMW in the non-agricultural sector as fixed by RTWP and WPC applicable to the place where he or she is assigned shall likewise be exempted from income taxation. SMW is statutory minimum wage, RTWP is regional tripartite wage and productivity board, and NWPC is national wages and productivity commission. The basic salary of MWEs in public sector shall be equated to the SMW in the non-agricultural sector applicable to the place where he or she is assigned. The determination of SMW in the public sector shall likewise adopt the same procedures and consideration as those of the private sector. Basic pay, including holiday pay, overtime pay, night shift differential pay, and hazard pay earned by the aforementioned MWE shall likewise be covered by the above exception, provided, however, that all employee who earns additional compensation such as commission, honoraria, fringe benefits, benefits in excess of the allowable statutory amount of 30,000 taxable allowances, and other taxable income other than the SMW, holiday pay, overtime pay, hazard pay, and night shift differential pay, shall not enjoy the privilege of being the MWE, and therefore his or her entire earnings are not exempt from income tax and consequently from withholding tax. Provided further that minimum wage earner receiving other benefits exceeding the 30,000 limits shall be taxable on the excess benefits as well as on his salaries and wages, just like an employee receiving compensation income beyond the statutory minimum wage. MWEs receiving other income such as income from conduct of trade, business, or practice of profession, except income subject to final tax, in addition to compensation income, are not exempted from income tax on their entire income earned during the taxable year. This rule notwithstanding, the SMW holiday pay, overtime pay, night shift differential pay, and hazard pay shall still be exempt from withholding tax. For purposes of these regulations, hazard pay shall mean the amount paid of the employer to MWEs who were actually assigned to a danger or strife-torn areas, disease-infested places, or in distress or isolated stations and camps which expose them to great dangers of contagion or peril to life. Any hazard pay paid to MWEs which does not satisfy the above criteria is deemed subject to income tax and consequently to withholding tax. In case of hazardous employment, the employer shall attach to the monthly remittance return of withholding tax and compensation in BIR for return periods March, June, September, and December a copy of Department of Budget and Management circulars or equivalent as to who are allowed to receive hazard pay. Any reduction or diminution of wages for purposes of exemption from income tax shall constitute misinterpretation and therefore shall result to the automatic disallowance of expense, for example, compensation and benefits account on the part of employer. The offenders may be criminally prosecuted under existing laws. Computation of statutory minimum wage. The basis of the computation of the minimum wage rates prescribed by law shall be normal working time of 8 hours a day. The computation of the wage shall be in accordance with the collective bargaining agreement, if any, or the provision of the labor code as implemented, unless otherwise amended or repealed by the subsequent pertinent laws, rules, and regulations. The holiday pay, overtime pay, night shift differential pay, and hazard pay shall be understood to be computed based on such agreements or labor law provisions. In determination of the minimum wage on a monthly basis, the withholding agent shall be guided by the prevailing minimum wage as reflected in the latest matrix of wage order and its own policy on whether employees are categorized as MWE not considered paid on Saturdays, Sundays, or rest days, MWE not considered paid on Sundays or rest days, MWE considered paid on rest days, special days, and regular holidays, MWE considered to work every day including Sundays or rest days, special days, regular holidays. The resulting number of days in the above enumerated categories are referred to as a factor or number of working paid days in a year. Factor or number of working paid days in a year. Alright. For MWE who do not work and are not considered paid on Saturdays and Sundays or rest days were applicable daily wage rate multiplied by 261 days divided by 12 months. 261 days is computed as 247 ordinary working days, 11 regular holidays, 3 special days equals 261, or the total number of days per year. On the first classification category, the monthly SMW is computed by multiplying the applicable daily wage rate by the factor of 261 days and divide the same by 12. A semi-monthly at 1/2 of the monthly rate, and the weekly SMW is arrived by spreading the annual minimum basic wage of 52 weeks. Thus, on a 382 minimum wage daily, the monthly SMW is 8,387, monthly is 4,154, and weekly is 1,970. For those MWE do not work and are not considered paid on Sundays or rest days, its applicable daily wage rate times 313 days divided by 12 months. 299 ordinary working days, 11 regular holidays, special days, total number 313. Alright, for those MWE who do not work and are not considered paid on the rest days, applicable daily wage rate multiplied by 365 days over 12 months, 299 ordinary working days, 11 regular holidays, 51 Sundays and rest days, 3 special days, 365. For the MWE required to work every day including Sundays or rest days, special days, and regular holidays, 299 ordinary working days, 22 regular holidays, 67.6 Sundays rest days, and 3.9 special days.